What's up, guys? So today, in this course, we're going to talk about the area of interest, where the markets react. And previously I've talked about I've talked about the indication. I've talked about how to identify trends, what you need to see to identify trends, and how you can identify trends. So, but today I want to talk about the area of interest, and I can also like categorize it, or I can also say that your area of interest is your battlefield. It's where you get to decide if you make money or if you get paid or you don't get paid. And it's and I call it battlefield because it's a place where your emotions, psychologically, physically, you're gonna be battling with a lot of feelings, a lot of things. And if you're not solid enough, you get to have formal hesitation, a lot of feelings that can resist you from getting paid, or that can also push you into having to have a loss. So you have to be able to be solid in these areas. I'm going to just go and you know go through the area of interest notes that I wrote. Oh shit. Okay. What did I just do? Okay. Okay. So now let's just go right into it, right? So I said area of interest is you can also use the shorter time, which is AOL or AOI, which is area of interest, where you get paid or you don't get paid. So I want to recommend this book for you to read. It's called The 33 Strategies of War. It's basically it's everything. You can use it for your personal life, you can use it for your finance, you can use it for relationship, you can basically use it for everything. So area of interest. Area of interest is just basically means that where the market react. And the reason why I use it as a battlefield is because that is where you react. That's where you have to like respond to the market. Are you going to like sell, buy? Then depends on your bias. It depends on what you're gonna see in the market, right? So into we're gonna jump into we're gonna jump into the chart right now so that I can show you what I need to show you, right? I don't know why it's not showing. I don't know why it's not showing. Okay, good. So I think okay, good. All right, so let's just do the chatting right now. So here, let me just if you watch the previous video about how to identify trends, you will see how I was talking about when the market will be creating higher high. If we're on uptrend, the market will be creating higher high and higher low, higher high, higher low. Then, if the market is like this, your job when you identify and trade, you should basically be waiting for the market to come to this area, this level, for you to be able to do anything. Because again, you can't do much in this area unless you're already on the trade from this area. And even though you're on the trade from this area, you still have to be waiting to see any reaction from the market in this area, whether it's going to come or continue going. So your job as a trader is just to wait to see anything that will happen in this level. And this level now is now called area of interest. I'll just use because of area. A lot of people call it key zone. A lot of people call it key zone. key zone. A lot of people call it a liquidity zone, liquidity zone. So many names. A lot of people call it supply and demands. A lot of people call it higher high. You can also you can call it the lows. Or highs. So my point is, this is basically gonna be, it's like, what they say, I don't like, I'll draw my battle line, like the battle line have been drawn, like exactly the same thing. The battle line have been drawn. It's where you get to fight. It's not just fight. You're not fighting against the market, you're fighting against yourself, because in this area you can get to doubt yourself, have hesitation, you can get to have FOMO, and you miss the trade, or you enter early, or you enter too late. This is where I call it battlefield. So it's not just like, okay, you enter when you get there. No, you don't enter immediately, because I will show you some things. That there are some times that it will come here, a lot of people will enter, right? Then the market will push harder down. Because again, the reason why the market will come down is because there are sellers. Then if the sellers is way stronger than buyers from here, what do you think the market will do? There will be liquidity grab, which is called the liquidity zone. Then it will push the market way below. Then imagine a lot of people buying in this area before having to wait for the market to be moving up, and their stop loss happens to be here or here. They get liquidated, then the market will not start doing what it's supposed to do. So you don't just enter when you get there. You have to wait. There are some confirmation that you have to, like, there are some language that the market will be speaking that you have to understand. We're gonna get into the entry video, so stay tuned to watch that one, or just be patient. So, but this level here is what we call area of interest, key zone, liquidity zone, and lows, because it's lower than this, so it happens to be low. Then when you're on a downtrend, it's going to be the high. It will be higher than the normal low. So this is just the basics. This is just the simple terms of, you know this is just the simple terms of key zones of this area, because you have to, this is where you get to make money or you lose money, or you don't, you miss out. Three things can happen here: you make money, you miss out, or you lose money, or you blow your account. Sorry, just three things. So your job is to wait on to always want to enter trade at the key zone, at this area here, area here, because again, this is where the market is way weaker here, and you don't want to enter trade in this area. You don't want to enter trade in this area. You don't want to enter trade in this area too. You don't want to sell, you don't want to buy in this area. You want to wait for the key zone. You want to wait for the key zone. You don't want to enter trade here, but you want to enter trade when it's retesting the highs. So on a downtrend too, so same thing on a downtrend. A downtrend. So now, so your job is also to wait for the market to retest the key zone, the previous high and the previous low, which is this. Because why? Because every single time you get to this point, it's always reacting. There's always reaction in the market. Even though the markets want to reject down, there's always going to be a reaction in that place. How? So let's say, for example, you were waiting for the market to get to this point. Then yeah, you can, sometimes you can do this. Sometimes you can do this and just continue. Or rather, you can just go like this, then it will come and return this again. What is it going to do? Sometimes it will come here to create a new higher low, then before we start shooting up. like this, then that means we having a change of trend. Like the trend is changing from selling to buy. So what do I there's always reaction. There will always be a reaction in that particular level. So all you have to do is just be attentive to what is happening. Which is why I said to you that you don't just enter immediately, you wait for the market to tell you what to do. The market always speaks a particular language. Your job is just like, okay, how do I understand this language? And there's another thing I want to say, and I think I should have started from the beginning. Is a lot of people, like my mentor said something in one of his videos, was talking like we've made money a god over us. So it means that all we are chasing is just to make money, but instead of us becoming a valuable, then that can attract the money. So money is not difficult. Making money from trading is not big difficult. I'm a victim of this. I'm not gonna lie. I've always been like this because how I got introduced to trading was not the proper way of being introduced to trading. And a lot of us, we are victim of this, where like we see people like, okay, you can make millions of dollars from trading today, but none of them are really showing the work that we have to put in, the sacrifice that we have to put in, the learn like the consistency that we need to have. And none of these people are actually talking like, okay, yeah, you come to trading, you can make money immediately. You have to have other source of income that can be financing your lifestyle while you are learning trading. So, and when I say learning trading, a lot of people are in the process of trading, they're actually not learning. They are in the process of just like, okay, they're in the process like, I want to make money, but they're actually not learning anything from the trading. That is why when they make money, they can't repeat what they did to make money, or they make money by just a luck. The market just bless them, and they think, oh, you can get blessed 1 week, 2 weeks, and you have that winning. But when you want to, the following week, you lose everything in 1 day, because again, the process at which you used to get that money, you cannot repeat it again. You already forgot. You get carried away because your job or your main objective in having to do trading is to make money. You're making the money, and you forget the learning part of it. And I've been victim of this for a very long time. So, without being said, I hope you understand this little illustration about this area of interest, and your battlefield. And I think I should write it and say battlefield. So now let's go into the main chart. Let's go into the main chart. Okay. So this is an uptrend that draw, but I'm gonna delete it. I'm gonna delete it. Okay, good. This delete. Okay. 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 So all right. So in this video, you can see. Let me be sure if I'm still okay. Good. So first of all, let me just do downtrend a little bit. Downtrend a little bit. So we can see we have the highs, right? We have the highs, then we have the market creating in. This is lower than this, so this, which is why I call it high. This is happens to be a new lower high now. Then we have the market days. We can use this actually. Then we have the new lower low and new lower high, and we have this new lower low and new lower high. Then the market push down all the way here. So now your job is to be able to identify when the market is breaking a particular place, then why. So for example, we have many reasons for the market to sell in this area, and we have this is a new low that the market created before it came to retest it, and then the market broke below it. then we know that anything below this area is definitely gonna sell. So we have to mark it area. We have to mark the area too, because this eye is lower than this previous one. So technically, we can use it as a lower high. Then and this one also is lower than this, and this one is lower than this previous one. So let me just, maybe I should just should I just name the I think I can just name it. Let me just name it. Lower low. Sure. Okay. So you can see. So also this one lower high. Okay, so how about this one? So okay. This one is right here. The color I need to change to black also. Okay, so it's right here. So now you can see what I'm saying. So it's, you can basically see how the market is creating higher, and we have this one also here. We have this one here also. So um same thing as if I'm, let me delete all the draw I have off 50 something. So okay, so now again I have also this, we have this market create a new low, and we have create a new low, and again see what the market has been doing. I'm gonna use the body, then we have the market creating this, then we have this, then it's lower than, then we have this, then see this one is higher than this, right? Look, remember what I told you, every single time the market is breaking a new high, then it's coming to retest. This is called a, like, liquidity zone, area of interest, and key zone, because again there's always reaction. What, every single time the market is, there's always reaction. And look at what happened. Remember what I told you, that always be careful and wait for what the market will do at the key zone, because sometimes it will break to change direction. Same thing is doing here. So after it starts changing direction, imagine you have, you just buy in hope that okay, it will sell, it will go up. Look at what happened. You get liquidated, then get retest, then boom. So always be patient. Always be patient when it comes to this. And let me see if I can get in another. Let me see. Yeah, this is a good one actually. This is a good one. And this one is also a good one. The market has been, we have a new high, a swing high. We have the higher low. We have the lower low. We have the lower low, lower high. It's basically like you just have to have have this is the lower low. Then the market creates a new lower high, a new lower low. I mean, you don't need anybody to tell you here, because again you don't need anybody. Again, it takes a lot of practice, a lot of time to be able to get used to things like this. Then you can see, then even though the market still goes up, it's still at the, it never passes this. This can be invalid if the market will come to this area, then that means this low and this high is not valid. Then we can be expecting for the market to change from here and go, but instead of it, the market is still having to create a new lower low, until then it invalidates this one here, invalidate this. Look at what the market did. Instead of it to come here, retested and go down, it didn't do that. It broke it. Now it means that this trend is not valid anymore. Then after breaking it, came for a retest. Same thing I told you earlier in this place. Then after that, then shoot up. Then we start having to create this uptrend. Higher high and higher low, higher high, higher low, higher, etc. So that's the way to just identify, and it's as simple as it's like you don't have to stress so much about it. You don't really have to stress so much about it. I'm just giving you example. Of course, it doesn't happen in all market condition. You have to know what you're looking for, or when you're looking for it. You have to know what you're looking for and when you're looking for it. And same thing as this. So moving on to, let's just complete this. Let's complete this notion. Let me go to notion. Okay. So let's go to notion. So your job is to be is just be consistent with it. Wait for the price to come to you. Like, the area of interest is your entry zone. It's where it's like I said earlier, you don't want to enter trade when in the middle, you don't want to enter the trade when it's already passed. You want to enter trade at that particular zone. So here's the psychology breakdown on it. Only trade where you have the hedge. What is hedge? Hedge is when your tools are more useful. Hedge is when it's a combined it's a combined of your setup time frame, your emotion, the peers. It combined with so many things, not just your A1 setup, because you can have your A1 setup and it can be on a session where there's no liquidity, right? So it's just gonna frustrate your capital. There are two resources that you get to lose: emotion and your capital. Then if you exhaust one of it, it's gonna affect the other one. If you exhaust your money, it will affect your psychological resources. Then if you exhaust your emotion and psychological wise, it will affect your it will affect your finance. So your hedge is just a combination of your head plus setup, your time frame, the session you're trading, the pair or the instrument you're trading. Let me just put it this way. Instrument you're trading. I always recommend trade one pair or one instrument at a time, and your clear condition. So you have to, like, what I mean clear. I mean, we go dive into it soon. If your setup is a break of structure, liquidity sweep, or let me just delete this one. This is what the chat okay, so break of structure if is a area of interest and confirmation. That is your battlefield. Nothing, not anything else. So my point here is that you don't fight every day. So a lot of people get it wrong, thinking that they can come to the market and fight every day and win. No, you can't. You can't fight every day. You can trade and make right informed decision every single day. Because again, not before I used to be like, okay, I want to come every day and trade. You can't come every single day and trade in the market. You can't function that way. You lose. I'm not saying you cannot make you can there are sometimes the market condition is right for you to trade every single day. There are sometimes you only have one A1 plus up, like A1 plus setup in a week. Sometimes you can enter trade on Friday and the trade you leave the trade until Monday, Tuesday, Wednesday, Thursday, Friday. And I prefer to do that because, again, what is the essence of, because it's do you know the kind of torture you go through having to wake up every single day and looking for a setup, knowing that you can lose this money? Okay, let me ask you this question. Would you rather enter a trade on Monday and you leave the trade for Monday, Tuesday, Wednesday, and you eat TP or you eat stop loss, right? Then you enter and trade on Monday. You make, let's say you make 1 to 3, 1 to 4, right? Then Tuesday you enter and trade it a loss. Tuesday and Wednesday you enter and trade it a loss. Then Thursday you enter and trade maybe profit, maybe loss. Which one would you rather have? To me, I would choose to enter trade one day and wait for 2 days, 3 days, and I know that it hits my TP or it doesn't hit my. I know that it's just one loss in the whole day, whole week. Then again, I'm preserving and managing my emotion, my psychology, because the next time I'm going to enter trade is not going to be based on, oh, I've lost 2 trade now. It's not going to be based on, okay, it's going to be based on the rules. It's going to be based on my setup. It's going to be based on my hedge. So, not trading is also a strategy. Yes, I mean, my mentor used to tell me that the best thing you can do, a trader can do, is just to fold hand and not do anything. It took me years to understand this. Imagine having to like the urge of not trading. You have to get to a level or place for you not to do that. Oh, like I know what it took me. Like it took me a lot of work to be able to fight against the spirit or the urge to trade, to be in the market. I have to fight it. And it's something you have, like, I'm telling you this because if you know this from the beginning, it will help you. Warriors choose terrains where victory is likely. So, exactly the same thing. You want to enter trade when you have everything aligned. The time frame you're going to trade with, the the session you're trading with, the market condition, your own even mental condition too. You don't want to trade when something pisses you off in the morning or when you're looking for money or maybe someone is stressing you. You want to trade when you are stable. So the next one we're going to talk about, your emotional state determines the battle too. So if you're hungry, tired, stressed, impulsive, unfocused, the battlefield is unsafe. Imagine you having a weapon. Your weapon is what? Is your money and is your emotion. I told you the two resources that you have is your emotion and your money, your capital. And you get to where you are and you're shooting everywhere because again, when you're stressed and you're not stable, even though it seems like it's your strategy, you second guess it. You will not be clear because again, if there's any little retracement, you freaked out like, okay, I think you will close the trade too early. And even though you're in profit, you also still close the trade too early because again, you're not like emotionally stable. So you have to put that in mind. So choosing your battle is choosing your outcome. So it's like a lot of people say that you cannot know the outcome of trading, but you can actually put your place in the place where you can you can predict what to come. Like the outcome you're getting can be more of like assurance that you know that 90%, 100% of time this will happen 70%, and 30% will be maybe market condition, maybe a mistake, maybe anything. So um so I only trade when my conditions are present. So you know your conditions. Your conditions is your check. You use your checklist. So not every market condition is your battlefield. So this I want you to understand this too because again, you don't want to trade when during you know other sessions like Tokyo sessions. It depending on the pair or the instrument you're trading. Don't get me wrong, but you have to be able to know when the liquidity, when there's volume in the market. So you don't want to be trading when there's news. You don't want to be trading when the market is shopping, like consolidating in one particular spot. You don't want to trade when the liquidity is unclear, when like you know that the market is not giving you the pattern it's supposed to give you. And you don't want to trade when your higher time frame and lower time frame is not aligning. So what I mean is that what I mean is that if your 4 hours time frame is telling you buy and the daily is telling you sell, it's not correlating. Or if 4 hours, because I use 4 hours or 1 hour as color, they have to be in the same position. If 4 hours is telling me buy and 1 hour is telling me sell, then for me, I not there's nothing I can do about it, regardless of where the market is gonna go to. So the two has to align. Then I'm gonna use the smaller time frame to for my entry. We're gonna get into that, when we get to the entry video. So because they traded in wrong environment, and most traders lose because their strategy is bad, or lose not because it's because they trade. So exactly. So every strategy is good. It's just the way you trade it. So with that being said, I hope this video helped in one way or the other. If you do, don't forget to like, share to anybody you might think that wants to learn trading. Then don't forget to join my Telegram group, where it's the community where I just post every day about my thoughts, help them, in terms of psychology and my what I'm going through, so that my job is just to help my younger self, like the things that I wish I knew when I started trading, so that nobody get like it will reduce the amount of mistake that you make, and it will increase your chances of your breakthroughs or your success in trading. So I hope this video help you. Then again, I have a journal, and the link is going to be below. You can click it if you want to get my journal. And the journal is very important to your journey. It's funny. But every single trader, especially for beginners, you need to journal your trading, because this is the way you can track your performance. This is the way you can track what is working and what is not working. You can track your emotion. You can track many things about your trading. It just help you. And one of the things that I didn't do from the beginning, because I was, again, a lot of traders focus on the process just because they wanted to make money, so they don't focus on the learning part of it, becoming the trader that can actually make money from the beginning. So which is my job in terms of helping you. With that being said, I remain Smiling Mosh, and I will see you in another video. Peace out.